Hey everyone, and welcome back to the channel. Today, we're diving deep into a fascinating and powerful setup that smart money traders absolutely love. It's called the Quasimodo pattern. I know, it sounds a bit strange, but trust me, once you see it, you'll start spotting it everywhere. Ready? Let's break this down, step by step. Things first, we need to understand the heart of any trend change. A shift in market structure. Look here, the market is happily making higher highs and higher lows, just chugging along in a nice uptrend. Then, something changes. After making a new high, price doesn't just pull back. Kid breaks the previous low. See dead. We go from making a higher high to suddenly creating a lower low. This is the very first signal. The little whisper that tells us the trend might be getting tired and preparing to reverse. This is the moment the trend quietly shifts direction. It's subtle, but it's the foundation for everything that comes next. We're not just looking at lines on a chart, we're reading the story of the market. And this is a major plot twist. Now, let's build the Quasimodo pattern itself. It's like putting together a puzzle. First, we have the left shoulder, which is just a previous high in the uptrend. Then, price pushes up one more time to create the head, which is our highest high. And remember that structure shift we just talked about, that break of the previous low. That's what confirms the head. After that, price pulls back up, but it doesn't make a new high. It comes back up to the same area as the left shoulder. This new, lower high is our right shoulder. See the shape. Left shoulder, head, right shoulder. 2. It looks a little lopsided, just like Quasimodo himself. This entire area, especially around the left shoulder, is what we call the Quasimodo zone, or the QM zone. Smart money loves building major orders right inside this zone, waiting for the perfect moment to enter the market. So, why does this pattern work so well? It's all about liquidity and trapping unsuspecting traders. Think about it, too. When price breaks that first high to create the head, many retail traders see a breakout. They jump in, buying, and place their stop losses just below that previous high, which is our left shoulder. Then, when the market reverses and breaks structure to the downside, those same traders might get stopped out. Or they might even try to buy the dip as price returns to the right shoulder. They see it as a retest of support. But what's really happening? The big institutions, the smart money, are engineering liquidity. They push the price back up into that QM zone, right where all those retail buy orders and stop losses are clustered. This is where retail gets trapped, and institutions rotate the market. They use that pool of orders to fill their massive sell positions before driving the price down hard. Let's watch it play out in a simulation. Price has formed our left shoulder, our head, and has broken structure. Now it's pulling back up, climbing slowly, heading right for our Quasimodo zone. Retail traders are getting excited, thinking the uptrend is continuing. Tough. Just taps into the zone, and boom, a reversal cleaner than a ninja strike. The rejection is sharp and aggressive. The institutions have filled their orders, and now there's nothing holding the price up. It cascades downwards, leaving all those trapped buyers behind. This is the power of the QM pattern, DES, a high-probability reversal setup because it is built on the very mechanics of how large players manipulate the market. Okay, so how do we trade this without getting trapped ourselves? It's all about patience and confluence. You don't just blindly sell the moment price touches the QM zone. You wait for confirmation. First, identify your QM zone based on the left shoulder. Then, look for other smart money concepts in that same area. Is there an order block? A fair value gap? These are called confluences, and they make the zone much stronger. When price enters your high confluence QM zone, you can look for your entry. Your stop loss goes right above the head. Why? There. Because if the price goes higher than the head, your entire Quasimodo idea is invalidated. It's a clear, logical place to protect your capital. Smart entries protect capital and maximize gains. Watch closely. You're not just guessing. You're trading a story with a beginning, a middle, and a very predictable end. And that's the Quasimodo pattern in a nutshell. From understanding the initial shift in market structure, to identifying the shoulders and the head, and finally, to executing a trade based on liquidity and confluence. It's a beautiful setup when you know what to look for. Take your time, go back through the charts, and try to spot it for yourself. Practice makes perfect. Thanks for hanging out with me today. Make sure you follow for more elite SMC lessons, Panda approved. See you in the next one. Welcome, traders. 2. We're unlocking one of the most powerful and reliable patterns in smart money concepts, the Quasimodo. If you've ever felt like the market reverses right after you enter a trade, this pattern is the reason why. By the end of this video, you'll understand its full anatomy and how to spot it like a pro. Think of the market like a staircase, ascending into the sky. Each step represents a new higher high, pushing the price upward. The market is in a clear uptrend, everything looks bullish, and traders are confidently buying. But then, suddenly, one of the steps breaks. The structure that was holding the price up is now fractured. That break, that shift in market structure, is the very first sign that a Quasimodo pattern might be forming. The market's first whisper that the trend is about to change. Now let's zoom in. In the Quasimodo pattern, the highest point is what we call the heads. Imagine it as a giant skyscraper, towering above all the other buildings around it. This is the final, climactic push upward, the point where most retail traders feel the most bullish. But what matters most isn't how high the tower goes. What happens right after this final push? The reversal that follows is where the real opportunity lies. This peak is designed to grab liquidity before the big move down. Let's look at a real example on the Bitcoin chart. See how the price makes a series of higher highs, creating a clear uptrend. Then, it aggressively pushes up one last time, taking out the previous high. This move sweeps all the buy-stop liquidity resting just above it. But immediately after grabbing that liquidity, the price reverses sharply, breaking the previous low and shifting the market structure. This entire sequence creates our Quasimodo zone, that pulsing golden area you see. This is where smart money initiated their sell orders, and it's where we can anticipate a powerful reversal. Gold is another fantastic example. Gold often forms textbook Quasimodo patterns, especially after clear liquidity grabs. Notice the price compressing, moving sideways, and luring in traders. Then there's a quick spike up to take out the highs, grabbing all that liquidity. Right after that, the price reverses with force, creating a strong displacement downwards. Smart money is now in control. How the price eventually returns back to the origin of that displacement, our QM zone, before continuing its new downward trend. It's a classic footprint of institutional selling. To make it even clearer, imagine a luxury sports car, like a Porsche, accelerating at full speed. Its target is a finish line just ahead, which represents a liquidity pool. 2. The car doesn't just stop at the line. It overshoots it slightly, grabbing the prize. That overshoot is the liquidity sweep. But then, it slams on the brakes and performs a sharp jet turn, reversing its direction entirely. That precise point, where the car brakes and turns, that is your Quasimodo zone. It's the point of maximum force and the beginning of a powerful reversal. The market accelerates to take out liquidity, then brakes hard. So, let's break down the full anatomy step. First, we have the left shoulder, which is a clear high in the uptrend. Then comes the head, the highest point that sweeps the liquidity above the left shoulder. After the head is formed, the price reverses and creates a lower low, which is our break-off structure. Funnily, the price pulls back up to form the right shoulder, which aligns perfectly with the level of the left shoulder. This right shoulder is our high-probability entry zone. It's where smart money has hidden their large sell orders, waiting for the price to return before pushing it down with incredible force. Now, let's watch this in a live simulation. See the price action playing out, candle by candle. We get our left shoulder, our head that sweeps liquidity, and then the aggressive break of structure. The market has shown its hand. Now, we wait patiently for the price to pull back. Watch the precision. The market comes all the way back up and taps the Quasimodo zone, or right at the left shoulder level, almost to the exact pip. And then, the reversal. It explodes downwards with incredible force. This is the power of trading with smart money. Once you truly understand the anatomy of the Quasimodo, you start to see the market from a completely different perspective, the smart money perspective. You're no longer the liquidity. You're trading alongside the institutions that move the market. You can find this pattern on any asset, from Bitcoin and gold to Forex and stocks. It is a universal principle of market structure. So, study this pattern, practice it, and make it your own. Master the Quasimodo, and you'll master market structure. Thanks for watching. If you found this helpful, be sure to like, subscribe, and hit that notification bell so you don't miss our next deep dive. Stay sharp and trade smart.